Hey everybody, it's Jason again with Level Head Trading. Going to talk about Tesla, just specifically on Tesla, what I'm looking at, what I'm anticipating in the big picture. So as we see, it's dropping dramatically from its recent highs back here in July of 2023, where we reached 299, almost 300. And comparing that to our low that we reached back in, well, I'm in the way of that. So let's move me over. So the low, 101.81. So basically we went from $100 to $300, right? So we got a 200% increase. This just came into my head right now. I've been noticing how Tesla trades a lot like Bitcoin as far as the moves that it makes. So think about this. Bitcoin recently went from 15,460 to 49,000. So if you make a 200% move from 15,460, that would bring you up to about 46,500, right? That'd be a 200% move. So Bitcoin had a little bit more than a 200% move from the lows. So now we go back to Tesla. Tesla pulled all the way down to 101, went up to 299.20, I believe, 200% increase. Now Tesla is at 218. So from the high of 299, we've dropped about $80. So what I'm anticipating, and I'm anticipating thinking about this with Bitcoin, but from the high, if we dropped 50%, which is not technically a Fibonacci retracement number, but people do kind of use that. So we're nearing the 50% drop from the low to the high and back down to 200 would be a 50% drop. So if we were to have a bull flag in the big picture, let me just do a quick calculation, right? 38.2, I like to use these Fibonacci numbers. 38.2, so if we gave back from a $200 move, basically from 100 to 300, and we have a bull flag in the big picture, that would be about a 38.2 retracement, right? So 38.2 retracement from a 200 gain means that if we were to hold the retracement of just coming down about 38.2% from the 300 approximately, then that would give us 223. So that's where we are right now, but a little bit lower. And so now let's look at the weekly candle. The weekly candle is hitting the 200-week moving average. So if we were to stop right here and hold this, then we would be in that kind of bull flag in the big picture. I'm talking about the big picture. It's not pretty to go from 300 to 218, but in the bigger picture, from 100 to 300 to pull back to 223, which is the 38.2 retracement, that would be reasonable. But what I don't like is the look of this candle. So we just finished this week and we have quite a bit of volume, not anything significant, but it's finishing at the lows basically of the week. It has not, has not formed any type of a wick. So typically when you finish, right, you'll have this, which is an indication that you want to go further. But then at the look of this particular week here, you see you tried to push lower, you briefly went under the 200-week moving average, and you closed right at it. The very next week, now that was a big fake out. You pulled back here to 193, but you put yourself back above the 200-week moving average. And then you got up to here. So here is the resistance, right? You could draw a line from here to here to here. There's your resistance area. So I'm anticipating that at best, next week will form some sort of a candle, maybe like this one or maybe like this one, right? But What I'm thinking is we are, let's go back to the daily. Let's go to the daily. So again, if you look at that candle today, you attempted to go up, but all you did, right, because you opened here and you filled the gap with the wick getting back to yesterday's price, the low of yesterday's price. But by the time the day finished, you finished here. So what do we have as support? So what we have as support is this daily trend change right here. So you have the low, which is 193 approximately, and then you made a high, and then you made a higher low, and then you continued, went sideways here, created a higher low here, made a higher high, and a higher high. Now you're giving it all back. You're giving it all back. So that means we're looking for a weekly higher low. So let's just get back to the weekly chart. Got to move me out of the way. So either we're going to hold this last weekly candle here, which is 194.07, right? Either we're going to hold that. Let's draw a line and see where that lines up on a monthly chart. So either we're going to hold that, which could be that. That would be a little more than the 50% retracement, because if you get down to 193, then you gave back about 50% of your total gain from the 100 to 300. And looking at this, right, that 193, I'm going to say that we will probably test this area. Initially, test this area. But we only have one candle that can show you that we held that price only one time. But looking at the chart, back in this area, we had this weekly straight up. We didn't create a weekly higher low, and this is back and forth. You would have thought that was a weekly higher low there, but you didn't make a higher high. That was resistance, and then you went even lower. But that was a key candle right there, right at 151. So I'm going to draw a line at that 151 because I like to use things that are clear. Like this is a clear level there at 151. I'm just going to put it approximately. So now let's go look at the monthly chart. Hopefully I'm not in the way. And see where these lines that I just drew line up on the monthly chart. All right. So that's no coincidence. I didn't know I was going to be that. It was going to come out like that. But, right, those are the lows of the monthly candles. So 100 to here, a monthly bull flag, the low was that 152, and then you get to the high. So do you confirm a monthly uptrend? This is a bull flag. It's just a continuation. So you get up to here. If you're going to confirm a monthly uptrend, then you need to hold this low here at 194. You need to hold that low, stop somewhere, and then continue and eventually go to a higher high. But I don't think that'll happen. Obviously, that's not going to happen anytime soon because we're looking at monthly candles. But anyway, the first level that's key is this 194. So this is January's month. We've got quite a ways to go before January finishes. But that will be a little bit more than a 50% retracement. What I am going to look for is potentially, if we get into that area, that we will go further lower. And we would not go below this, which is the 152. But using, just like I was talking about in my video with Bitcoin, we had approximately a 61.8% retracement back to the highs, where Bitcoin went from 15 to 49, which is a 61.8 to 62, 63% retracement back to the all-time high, which was 69, and now we're pulling back. So in reverse, I'm thinking potentially that's what Tesla will do. Potentially, it'll have about a 61.8% retracement, and where that will bring us will be about 175. Okay, so that will be between this monthly low and below that monthly low. So 175 will come out to right about the middle of that candle there. That is what I am anticipating uh, most likely will happen. I don't think we're going to hold that 193. I don't think we're going to hold it. Generally, when you go straight up that easily, how long did that take to make 200%, right? That just took 1, 2, 3, 4, 5, 6, 7 months, 200% increase. So money can be made very quickly and it can be taken very quickly. So that's, in my opinion, what's going to happen. I think we will probably most likely, trading is in probabilities. I think most likely that's the area. That's where I would be really interested. I will probably take some stabs at quick flips when Tesla gets into this oversold area on the daily chart. So talking about oversold, all right, we are not oversold on the daily chart. We're at 31.95, so we're close. We're close, but generally it would be, under 30. So other thing to notice is you've got the EMA cross with the trend, not the trends, with the indicators that I use. This is 12 period and 26. So we've got the EMA cross, and this is the 200-day moving average. So we are now right on this particular candle here. Notice how it stopped right at the 200-day. So it's like, okay, are we going to hold the 200-day? Are we going to hold that low right there, which was 228? And the low of that particular candle where it hit the 200-day was 231. So initially, you just barely hung on to that. The next day, no, we're not gonna trade above the 200-day moving average now. So that is going to be a point of resistance, is the 200-day moving average. So now the daily chart is under the 200-day moving average convincingly, not just by a little, convincingly. So next little area of support is 205 right there. You had the gap fill, which happened in this area here. So it filled the gap and then it just went straight up. Other thing to note is what I like to look at is when it came off of the high, that high that it made right here, and then before that, you see the daily RSI? The daily RSI, the actual daily RSI reached 88 on the daily chart, 88.46. So when anything gets to 88 in that range, then at some point in time later down the road, you will most likely get at least down into the low to mid 20s, right? So you got to 88. That was very extreme. So we're at 31. Over here, we got into 28, 29. And this is where we are. So it's kind of a lot of empty space. So I am fairly certain that we are going to come down and we're going to test that $200 area initially. But I will take a stab, depending on how the candle looks. Let's just say we have more downside, we get under 30, and we have several days where we're just kind of sideways. Well, right, technically that would be a bear flag, but then I would expect that you'll probably have a pop at some point and maybe it could be a 4, 5, 6, 7, 8% move to the upside, making a daily higher low. The other way you could play this is, and this is what I have to get used to being patient with when something is just dropping and dropping and dropping. What you could do to be more definite as far as using a stop loss, because I always recommend you got to use a stop loss. What you could do is wait for there to be a clear daily trend change. So we pull down, and then we have a pop, and you wait. And then if you have a significant amount of a bounce, right? So let's just say we drop down and hypothetically get down to here. And then for the next couple of days, we bounce up pretty good, right? Well, to confirm the daily uptrend, if we have a bounce, then we need to, at some point, pull back and not break the low. And so what you could do is you could be patient, wait for that bounce to happen, and then when it pulls back to potentially form a daily higher low, then you can use that, whatever that low price was, as your stop loss. That way you can be more precise as far as taking a chance and see maybe this is the new low. This is the new low that we hold. But so that's another way you could play it there. But anyway, in the big picture, I'm thinking potentially that we are going to break that 200 price level, and that will be the 50% retracement. And if you get that far down, that's not a bull flag. So then I would expect that the next logical area would be about a 61.8% retracement. And like I said, in the monthly time frame, that would fall between the the the, the low of the higher low monthly, but not hold the next higher low that it formed, which was around that 193 area. So that's what I think. This is going to take a long time to play out in the big picture. So just going to be patient, but I will probably take a stab at it, just to get a quick flip, because we are dropping hard and fast, and the farther we drop without having any kind of bounce, compared to the 200-day moving average, right? When you get too far, when you just go quickly and the 200 moving average is that far away, then I think it's pretty safe to take a couple stabs at scaling in a position and see what happens. But like I said, you could use the stop loss based on a potential daily trend change if you have a nice bounce and then you pull back and then you use the low of whatever that low was. So anyway, that's my video for today on Tesla. If you like it, please subscribe. If you're not, I have been off air for a couple of years. Now I'm much, much better at what I do. So wanted to share it with you. Have a good weekend.